Let's talk about the timing. When do you actually perform these procedures? Well, timing refers to when the procedures are performed or the period or date to which the audit evidence applies. We could perform tests of controls or procedures at an interim date or at period end, something that they love to beat to death here. The higher the risk of material misstatement, the more likely it is that the auditor may decide it's more effective to perform these procedures nearer to or at the period end rather than at an earlier date, or to perform the audit procedures unannounced or at unpredictable times. Getting a little spicy there. For example, performing audit procedures at selected locations on an unannounced basis, that could increase the accuracy and increase the effectiveness of your procedures if the client doesn't have time to prepare safeguards against you finding their fraud. On the other hand, performing audit procedures before the period end may assist the auditor in identifying significant matters at an early stage of the audit. So what this is saying also is it's not bad. You should also do interim testing. That's just, if it's a big enough audit, definitely do that in addition to your year-end testing, because if you test pretty early on into the period, well before the year is even over, you may find significant matters early on, which obviously gives you more time to deal with them. Consequently, resolving them with the assistance of management or developing an effective audit approach to address these matters. If the auditor performs tests of the operating effectiveness of controls or substantive procedures before period end, the auditor should consider the additional evidence that is necessary for the remaining period. We're having a good time here. Make sure you're stretching, stand up, get some energy, get the blood flowing. We're having a good time, powering through. I'm having a good time. I hope you are as well. Lots of important points to keep in mind here. In considering when to perform audit procedures, the auditor should consider matters such as the control environment, obviously the overall internal controls, as we mentioned, when relevant information is available. So, for example, electronic files may subsequently be overwritten, or procedures to be observed may occur only at certain times. So obviously, when are you going to perform those procedures? Just think, when is it possible to do it? The nature of the risk. So, for example, if there is a risk of inflated revenues to meet earnings expectations by subsequent creation of false sales agreements, the auditor may examine contracts available on the date of the period end. Interesting point there, because the risk of overstated revenues to meet a certain earnings expectation, you might examine contracts available on the date of the period end to watch out for that. At the period end is when, okay, if year one revenue needs to be $1 million in order for us to get a bunch of bonuses as management, maybe if we're only at $750,000 of revenue by the end of the year, we'll do one last $250,000 transaction just to kind of cram in the additional revenue we need. But that's obviously going to be at the end of the year. Lastly, the period or date to which the audit evidence relates. Certain audit procedures can be performed only at or after a period end. For example, agreeing the financial statements to the accounting records or examining adjustments made during the course of preparing the financial statements. If there's a risk that the entity may have entered into improper sales contracts or that transactions may not have been finalized at period end, the auditor should perform procedures to respond to that specific risk. Let's see an example here. For example, when transactions are individually material or an error in cutoff may lead to material misstatement, the auditor should inspect transactions near period end. Like we said, some transactions can be tested at an interim period, but some it makes sense to do it at the end of the year, when everything's fully processed and all the accounting systems have finalized financials. Like obviously, you can't really do cutoff procedures till the end of the year. Let's talk about the extent of these audit procedures. The extent refers to the quantity of the specific audit procedures to be performed. For example, a sample size or the number of observations of a control activity. The extent of an audit procedure is determined by the judgment of the auditor after considering the tolerable misstatement, the assessed risk of material misstatement, and the degree of assurance the auditor plans to obtain. In particular, the auditor may increase the extent of the procedures that they are conducting as the risk of material misstatement increases. However, increasing the extent of an audit procedure is effective only if the audit procedure itself is relevant to the specific risk and reliable. Therefore, the nature of the audit procedure is the most important consideration. Right? Applying those correct procedures to the correct assertions, that is the most important point, because you could do more procedures, but if you could walk more, but if you're walking in the wrong direction, well, it's only going to hurt you, right? Sampling, right? We have a little section on this, but we're going to talk about it a little bit here. Valid conclusions may ordinarily be drawn using sampling approaches. However, if the sample size is too small, the sampling approach or the method of selection is not appropriate to achieve the specific objective, or exceptions are not appropriately followed up. There will be unacceptable risk that the auditor's conclusion based on the sample may be different the conclusion reached if the entire population was subject to the same audit procedure. Let's think about that. If you've got a campus of 10,000 college students and you sample 5 of them, well, let's think about that for a second. That's probably not going to give you a good representation of the entire college campus. So making sure that when you're doing these audit procedures, you're sampling enough. Even if your model that tells you how many samples you should select tells you that 5 is enough, maybe you should think about this for a second, use your professional judgment as an auditor, and think, okay, I actually do need to test further. I need to select more samples. Let's talk about tracing and vouching. We see this in a few other lessons, but it's very important. I want to make sure you're familiar with it. We see this more so in our revenue cycle, cash cycle, those lessons there. This is how we are going to do some of our audit procedures. If the objective of a substantive test is to detect the overstatement of sales, which is categorized as the existence assertion, so that's something I'd memorize, the existence of sales, right? Do they actually exist? Overstatement, that's the corresponding assertion. The auditor should trace transactions from the accounting records, such as the sales journal, to the source documents, such as the customer order, sales order, shipping documents, etc. Tracing and vouching. So a procedure could be, oh, we trace, we vouch. Now you can't use those terms interchangeably because vouching is vouching down. You start with the financial statements and think about it. Vouch, the arrow pointing down, good way to remember it. Trace, just the opposite, right? Vouch, trace up. For vouching, we start with the financial statements and move. So the financial statements are at the top and you vouch down. You move through the transaction details to the source documents. Now, for tracing, you start with the source document, say it's down here. You start with a purchase order and you go all the way and see if you can find that on the financial statements. You trace through all of the accounting records and try to see, hey, we saw you purchased a $10,000 machine. Can we find that machine on the financial statements? Again, vouching is starting with the financial statements, just picking out, let's say, oh, we saw that you recorded on the financial statements a $10,000 revenue increase. Can we find the sales document relating to that revenue? Important point. I think this actually puts it in a nice, clear, concise way. Definitely memorize that. Definitely be familiar.
Hey there. Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.